I'd like to welcome you to Eide Bailey's first of 3 webinars on the GASB's Revenue and Expense Recognition Preliminary Views document. Now, comments on this document are due to the GASB on February 26th, which by my calendar is only a few days from now. However, if you do want to comment, GASB will accept your written comments. Public hearings are going to start up later in March and go into the end of April. And then deliberations will last at least for another year. So we have some time. And just to give you a sense, a little secret, GASB does accept comments from all who want to comment. They do accept them after the due date. So if you do hear something that you want to ask a question about or provide feedback about, certainly provide it to them. They really want to hear from you because this is going to be a large change for many of us. And that's why, again, today we're going to go slow. Also, I want to go slow today because many of us are experiencing severe weather. For those of us, especially down in the Southwest, especially in Texas and Oklahoma, our hearts are with you. And if you're listening to the CPE on just battery power, I think there's more important things to do. Go get some warmth if you can. So let's get started. My name's Eric Berman. You've heard me before. And again, this is the first of 3 one-hour sessions on the GASB preliminary views document. Again, due to the nature of this project, I'm taking it slow. Today's agenda only discusses the scope and objectives of the project, the overall conceptual framework for revenues and expenses being considered, and how the GASB may categorize revenues and expenses based on this framework being considered. Now, what is a conceptual framework? In accounting, these frameworks are interrelated objectives and concepts that can be used as a basis for establishing consistent financial reporting standards, in this case by the GASB. Now, taking away all that jargon, if you think about it, a conceptual framework is the skeleton that holds up the GAAP body. In this case, the GASB is at the second step of 4 or even more steps in potentially retooling the skeleton of how we recognize and categorize revenues and expenses. You see, the revenue and expense model that we've been using probably our entire career just doesn't make a lot of sense. It's not symmetrical. Some of the revenue concepts have except fors. Some of the expense concepts have except fors. And it leads to a lot of head scratching. And so, that's why the GASB's headed down this road. But that leads us to our first polling question. So, Brian, why don't you take us away on our first polling question?
You bet. So the first question we've got is, I think the current way that state and local governments recognize revenue and expense is...
About right. There are some things that need changing, but not many. Well, that's kind of the direction of the project. That's what it seems to be. And in doing so, that's a good transition to talk about where we've been and where we're going. And let's talk about the scope and objectives of the revenue and expense project. Now, this project did not happen overnight. Much of the current GAAP that we use stems from prior to 1998, as you can see here. And for those of us who have been working in our current positions and preparing or auditing financial statements since then, you may not realize that the revenue and expense stems from at least before that. The current financial resources measurement focus and modified accrual basis of accounting, which is in the governmental funds, that really stems from way before the GASB was even established, and likely before even its predecessor entity, which was known as the National Council on Governmental Accounting. And they included the modified accrual basis of accounting back in 1979. But if you read that statement one, a lot of which has been superseded long ago, some of those concepts have been around since before the first so-called blue book issued by the predecessor of the GFOA. And that happened in 1968. And there's still other concepts in revenue that we've been using since before 1968. So this is really, really old stuff that kind of needs to be modernized for the modern world. But let's focus on the GASB. So back in 1998, and this is when I was involved with the GASB and creating what became GASB 34, the GASB issued Statement 33, which was, of course, right before 34, accounting and financial reporting for non-exchange transactions to address revenue and expense recognition for the most common government transactions, such as taxation, grants, and intergovernmental transactions, which is sort of when a state pays, say, to local school districts in support of education, or general state aid and so on. Then right after GASB 34 came out, GASB 36 was released, and that was, how does the receiving government report shared revenue transactions? And that was issued in 2000. But by the way, Statement 36 also amended Statement 33 because there were some issues within Statement 33, some bugaboos. And guidance for exchange and exchange-like transactions, though, that's limited to a few paragraphs in GASB 34, but not much else. And this exchange and exchange-like reporting we've seen and we're going to see again. For example, over the past couple of webinars that I've talked about at GASB 87 on leases, I use the phrase exchange and exchange-like transactions, but again, there's not much gap on them, only a few paragraphs in GASB 34 and not much else. And between the issuance of GASB 34 and GASB 62, which came out in 2010, we relied mainly on FASB standards, not GASB standards, and AICPA concepts to determine how to recognize revenue, to determine how to categorize revenue and expenses in the full accrual financial statements. And GASB 62, that came out in 2010 and didn't do much to change, as it only presented those FASB and AICPA principles that align to the conceptual framework, the skeleton of GASB. However, many of these principles in GASB 62 stem from much earlier, prior to the FASB, and even prior to most of the AICPA that we know of today. Those are from the 1940s and 1950s, and we just modernized them in GASB 62. So much of what we use today in presenting revenues and expenses is extremely old and built on a rickety set of foundational principles. It's sort of like dealing with, dealing with a very old house. So fast forward to a few years ago in 2014, the FASB issued ASU 2014-09, Revenue from Contracts with Customers. Now, 2014-09 established a performance obligation model as the basis for revenue recognition, and that replaced large portions of the then FASB revenue recognition standards. The equivalent pronouncement was issued by the International Board, and that was IFRS 15, Revenue from Contracts with Customers. Now, those two pronouncements were the result of a joint project between the FASB and the International Board. Now, while this was going on, the umbrella organization over GASB and FASB said, wait a second, let's take a look at GASB 33, since that's been around for a really long time. And so they asked they asked folks to review GASB 33 on an independent basis. Now, they concluded that GASB 33 was actually doing a pretty good job, and it provided useful information for financial statements, and it can be applied as intended. In other words, the current gap worked. However, there were challenges within GASB 33 because it was inconsistent. For example, the report noted that some governments experience challenges as to whether or not a transaction is an exchange transaction or a non-exchange transaction, and trying to distinguish between, say, a property tax lien and a levy date, even though there are two different concepts. So while this was going on, the International Public Standards Board, which you'd be surprised, but there is an international board that is akin to the GASB, they got into the act by adding projects to its agenda, doing revenue and expense recognition about 6 years ago. So all at the same time, the GASB said, okay, we got to fix some of this stuff that's in there, and they started research. And while the GASB was doing research, the FASB issued an update to Topic 606 for not-for-profits. And for those auditors on the call, you may have been doing a lot of work, with Topic 606 and now Topic 958 for not-for-profits. And that's been around for a while. But most importantly to you, the GASB has issued they issued an invitation to comment, or an ITC, revenue and expense recognition, about 3 years ago, to solicit feedback from you on the development of a comprehensive revenue and expense recognition model. Now, the ITC described 3 potential models based on 2 methods. The exchange, non-exchange categorization, which is what we do today. And they also asked about, gee, what if we go down the road and do a performance obligation or no performance obligation categorization? A third model was combining the two. The board received 55 written responses to the ITC from all sorts of folks. And in addition, the board received verbal responses at 3 public hearings. To sum it up, the feedback received in response to the ITC was mixed at best, and I'm making it mild. It was mixed. Some stakeholders like the current system, like a lot of you said in the survey, don't do anything. We love what we do, even though it could be as much as 60 or 70 years old. Now, tell me something that you do every day that is 60 or 70 years old. Others supported the work towards a new method of categorization just to address the inconsistencies in gap. And another group kind of liked in the middle, and a few didn't like much of anything. So the GASB concluded that the definitions in gap of exchange and exchange-like and non-exchange, well, these were inconsistent, as those definitions rely on a subjective notion of value. And because the existing definitions don't equal, they're not symmetrical, no wonder certain transactions simultaneously can meet more than one definitions. I mean, 2 governments can categorize similar transactions totally different, ranging in things from grants to inventory to taxes. I mean, think about it. If you're a preparer, take a look at what your government does and compare it to your peer government. And sure enough, there could be slight differences. Now, in the ITC, the concepts of performance obligation and no performance obligation, those were just too complex for people. So the GASB threw them both out, and they said, let's start over. And they began with 2 additional years of research. And what we're talking about today and in March and in April is the result of 2 years of work. Is the work over? No, not by any means. Now, once the comments are received, you're looking at least another year, maybe 2 of additional deliberation. but change will be coming to revenue and expense. Mark my word, before the end of your careers, unless you're within a year or two of the end of your career, change will be coming. Now, the GASB has these terms, which I need to talk to you about. For those of you who are not GASB geeks, I need to explain to you just what is a preliminary views document. A preliminary views document, or PV, is the GASB's current views at a relatively early stage of the project. The PV is a step toward an exposure draft of a GASB standard, but a PV is not an exposure draft. It's just a step towards it. That exposure draft, if it does come, will be at least a year or more from now. The PV presents the GASB's initial views. It's not final views, it's their initial views on revenue and expense recognition, and it discusses the foundational principles, purposes, and objectives of the GASB's proposal. This contrasts with the ITC, which was a staff paper. The GASB board didn't object to it prior, but they didn't vote on it either. A PV is also issued when the GASB anticipates that respondents are likely to be sharply divided on the issues, or when the GASB itself is sharply divided on the issues, because you were divided in your feedback on the ITC, and so is the board. So the GASB believes that a PV is more appropriate at this time than an exposure draft. And my guess is you will be sharply divided on this. There are 8 chapters in the PV, of which today we're going to go through 3. Next month, we're going to be reviewing the revenue side, which is just 1 chapter. And then in April, we're going to be reviewing the remainder of the document. Now, beginning in next month's webinar, I may be referring to case studies in the appendix to the PV. Now, I find these case studies as essential as they compare what's in the PV to what we do today. I really like them, and you can here. I have them printed out. Maybe you can hear them. I have them right in front of me, and they're all dog-eared and so on with notes on them. And I know I sound like a GASB geek, but this stuff is going to change our careers into the future, and so I find these really, really essential. If you decide to dig deeper into the PV, might be a good idea to have a printed copy of these cases on your desk, like I do, to refer to with each element. And again, I like to do that as well. So keep those handy. Now, the goal of the GASB's work as contained in this PV is to develop a conceptual framework for revenues and expenses. The GASB wants to develop guidance that is applicable to topics for which guidance is limited. They also want to improve existing guidance that has been identified as challenging to apply. And they want to consider including this performance obligation, which is in FASB standards approach to GASB's authoritative literature, but wait on it until they receive feedback. And then make a judgment on existing and proposed guidance based on this framework. An overall goal is to enhance the quality of information that users rely upon in making decisions and assessing accountability. Now, do the elements of this project serve that need? We're going to see together as we progress in our careers. There are 3 aspects contained in the jargon I've used that you'll hear repeatedly over today and over the next 2 webinars. I use this word called categorization. And what does that mean? It's how we classify a transaction and identify the relevant characteristics of that transaction in the context of a group of similar transactions. So for example, how do we determine an exchange or a non-exchange transaction? Recognition is the process of determining when an item should be reported as part of the financial statement, such as an asset or a deferred outflow of resources, or a liability or deferred inflow of resources, or an inflow and outflow. Now, currently GAAP requires that an asset, say from a sales tax transaction, is recognized when the underlying purchase occurs. from which the tax is derived. And that's for your jurisdictions that have sales taxes. Sales tax is then recognized in the same period that the asset is recognized, provided that the underlying exchange has occurred. Now, obviously, if the tax isn't paid from the retailer, for a little bit, there's a receivable that's recognized, but you still debit receivable credit revenue. That's recognition. Finally, measurement is the process of determining the amount at which the elements should be reported in the financial statements. So I just mentioned revenue and receivable, receivable and revenue. Um, how much is that? How do you measure it? And oh, by the way, are there uncollectible amounts? And so that's called measurement. There are some exclusions from this project. So far, the GASB is excluding capital asset and inventory transactions. That includes purchases, sales, abandonment of capital assets, non-monetary transactions involving capital assets, depreciation, gains and losses from impairment, remeasurement of capital assets, inventory, that's all excluded. Financial instrument transactions are excluded as well, including investments, financial guarantees, derivative instruments, leases. No, they're not doing away with leases as of yet, or probably for a long time. Short and long-term debt. It also excludes interest expense as it relates to short and long-term debt. Interest income's excluded and the changes in fair value. Finally, hate to burst everybody's bubble, but pensions and OPEB and COMPABs are also excluded. Breaking news, an exposure draft is about to be issued to propose to update compensated absence transactions. The GASB is going to be voting on it during next week's meeting. By all means, we're going to have some information for you later on this spring. So stay tuned. There's probably going to be an update to compensated absences. Finally, donations and contributions of all types are also excluded. Now, again, for those of you who are into GASB statement numbers, we're talking in scope. GASB 6, 24, 33, 36, 34, 62, and so on. Out of scope is basically everything from 2016 forward in progress. So this could change. Remember, we're only at step 2 out of a 4-step process. So just remember, this all could change. So let's go through some of the foundational principles for the model. Since we're at the bottom of the hour, let's get into the meat of this conceptual framework. The GASB used 5 model assumptions, which is what I call the true norths for the revenue and expense recognition model so far. First, revenues and expenses are of equal importance in resource flow statements. By resource flow statements, we're talking the statements of activities, we're talking the statements of revenues and expenditures, changes in fund balance, and the fund flow statements, the statement of changes in fund net position, and so on. That's what we're talking about. Revenues and expenses are of equal importance. The second true north, revenues and expenses should be categorized independently and not in relation to each other. Third, for accounting and financial reporting purposes, the government's an economic entity and not an agent of the citizens. And we'll explain these in summary in a little bit. 4, symmetry should be considered to the extent possible in the application of recognition, categorization, and measurement. And 5, a consistent viewpoint from the resource provider's perspective should be applied in the analysis of revenues and expenses. So let's break these down just a little bit. Let's break down the true norths. The GASB has the initial view that recognition of a revenue or an expense is not influenced by the related revenue or expense. So let's dispel this legend immediately. And it is just a legend that the matching principle applies to state and local government accounting and financial reporting. Now, I learned this from my professor in school. You probably learned this from your professor in school that, oh, yeah, state and local government, GASB accounting and financial reporting, we have this thing called the matching principle. Wrong, wrong. It has never been in GASB GAAP. It is only in some, but not all, private sector accounting standards. That approach effectively subordinates expense recognition to revenue recognition. In government accounting and financial reporting, we use this thing called interperiod equity as the key relationship between revenues and expenses because it helps make a judgment as to whether or not your current year revenues are enough to pay for your current year services. For that reason, the GASB concluded that revenues and expenses should be recognized independently by relying on their respective definitions. We therefore consider periodicity more than anything. In other words, did revenues and expenses apply to this reporting period? And it's why we have this thing called deferred outflows of resources and deferred inflows of resources. The next piece is revenue transactions are categorized independently from the programs they fund. Now, this may differ from what you believe. You may categorize expense transactions based on the category of the source of the funds. But think about it. Does your government provide fire services solely if the property or taxes are available to pay for those services? Probably not. In governments where fire services are a business type activity, well, yeah, maybe so. But in most other governments, general revenues pay for fire services. Many of our operations are not strictly fees for service. Now, finally, governments are separate from other governments and the citizens that create the government. Yes, if you work in a government, you're a public servant and you work for your citizens. However, the accounting is slightly different. Revenues and expenses are not netted, with net amounts reported to us without an understanding of what makes up the net amount. Now, based on what we are learning about in the implementation of GASB 84, of which we're going to talk about that come up in May or June, where we're going to say one more time, GASB 84, our governments are not in a fiduciary capacity over tax revenues and general government expenses. The GASB is attempting to minimize this net reporting with this project. Net reporting is different than symmetry. The GASB wants to convey that symmetrical principles should be developed for categorization, recognition, and measurement that is applicable to revenues and expenses. Let's have symmetrical principles, not net reporting. This may be different than what we're doing now, especially in the transactions that are the result of estimates. After all, the estimation process of, say, uncollectible taxes is different than different government by government. By the way, disclosure of estimates, that's also breaking news. There's a project that is going on risks and uncertainties. And one of those uncertainties is the estimation process. And we could be disclosing in a few years some better disclosure on estimates. It's a little too early as of right now to make a statement about that. Finally, the GASB wants to have a consistent viewpoint of recognizing revenues and expenses. Now, if your government is a receiving government for a grant, of which many of us are, the recognition of revenue should be the same as other governments receiving the exact same grant. That's what GASB is saying. Now, if your government is a paying government for that same grant, say you happen to be in a state and your government is providing that same grant, perhaps as a pass-through, well, your government's expense recognition should be the same as other governments providing that same grant and passing it through to their subrecipients. So that's what the GASB is saying by saying, let's provide principles using the same viewpoint. And again, that's one of the reasons why we're here today. Now, again, let's remind you that I'm trying to dispel this urban legend No, we don't have the matching principle, despite what your accounting 101 professor may have told you. That's what my accounting professor told me. We don't have matching here. Matching is fine for not-for-profit and for-profit accounting in most cases, but not for state and local government accounting. We've never had to align our revenues and expenses, even in the funds that do full accrual. Think about it. Your municipal utility may also have grant funding, even though it may be a business type activity. I mentioned fire service or any other general government program or service. The revenues do not need to align to the expenses. So a framework needs to be developed, which is again, why are we here today? So let's apply the true north just to revenue. The GASB has an initial view that there are two categories of transactions within scope. And after major deliberation and discussion, it took them a long time to figure this one out. They landed up on category A and category B. And I know you're laughing because I certainly did, saying, how many hours did you spend to decide on category A, category B versus category 1 and category 2? Who knows? But they landed up with category A and category B. Both categories of revenue recognition are based on some form of legally enforceable claim. Such claims are based on either the government having to do something in order to recognize the revenue, which is category A, or there's some force of law or regulation or compliance, which is what we would call category B. So hopefully this jargon is making it a little bit simpler for you. So let's go a little deeper. Most fee-for-service arrangements would be in category A. In other words, okay, does the municipal water district deliver water to the customer? Did the municipal electricity district deliver power to the customer? I know that's a bad thing for you folks in Texas and Oklahoma right now, but let's assume they did. Was a lottery ticket purchased? Was a payment made for tuition to be provided the next semester, even considering the last date to withdraw? Was a valid service provided by a doctor, say, in order to claim Medicaid reimbursement? As you can tell, category A transactions are categorized by distinct goods or services. Each distinct good or service entails what's called a binding arrangement. And you're going to hear this phrase over and over again, probably for the rest of your career. Each distinct good or service, again, entails a binding arrangement. In other words, did the government perform a service in exchange for the fee revenue? The good or service may or may not come with a performance obligation, meaning did the government do what it was supposed to do in accordance with a contract? If yes, then revenue can be recognized, including perhaps over time. At each point in time when the performance obligation is satisfied, assets are then transferred to the other party in the transaction. The rest of the types of transactions would be category B, as they have forces of law, contract, regulation. The vast majority of these we know today as non-exchange transactions. And those are the ones that have been around since even before GASB 33. In non-exchange transactions, the value does not equal the services provided. After all, our fire services to our house is worth way more than the property taxes that you may have paid to fight a fire at your house. So the numbers don't equal. Category B transactions is proposed to include voluntary, imposed, derived, contractual, and government mandated non-exchange grants and taxation. It's also proposed to include things like shared revenue, meaning taxes and fees collected by an upper level of government or a lower level of government and apportioned to another government. It also includes general aid provided by a state government, as an example, to another level of government. Property taxes, purpose restricted grants, and similar, those will be category B transactions. If a category B transaction has a time element involved, a deferred inflow of resources will result on the revenue side. So, for example, for my friends in Colorado, if taxes are levied in one year but cannot be spent in that year, then the amounts received or receivable would result in a deferred inflow of resources until the time restriction has passed. And that's exactly what we do today. But you see, the framework for that really didn't exist. And now the GASB is proposing that framework. It's sort of like putting the skeleton in the body after the body is up and running. To categorize revenue, 4 steps are involved, as on the screen. So step 1, does the government have an increase in net assets? Step 2, does the increase in net assets result in a related liability? Step 3, does the increase in net assets result in an inflow of resources applicable to a future period? In step 4, if none of the above worked, then recognize revenue. So I had to read it because you're going to see that again come up next March. In March, you're probably going to see it again in April. So for those of us who need a visual, here it is. If no increase in net assets stop, do not pass go, you don't have a transaction. It's out of scope. If you do not have an increase in net assets, it is out of scope of these provisions. No revenue. If there is an increase in net assets, but it also increases a liability, such as a deposit or an advance, then that's your transaction. Easy peasy, debit, asset, credit, liability. Easy transaction. Now, if that's not your transaction, is the increase in net assets applicable to a future period? If yes, then your credit would be to a deferred inflow of resources. Debit asset, credit deferred inflow of resources. And finally, if you say no to that, then your credit is to revenue. So I know what you're saying. Eric, since GASB 63 in 2010, that's 11 years ago, there's no such thing as net assets. Yes, the GASB staff know this, and the GASB staff know that this aligns to the conceptual framework, which has not been updated. Now, should we have a final revenue and expense recognition standard, the conceptual framework would also have to be updated by that standard. So you see, we've been dealing with this boo-boo for now 11 years. The GASB never updated the conceptual framework and concept statement number 4, and that's why net assets is still on the screen. And so it'll all be updated once we get a final standard on this one. So let's break away even the graphic here. Getting to an increase in net assets is pretty straightforward. Again, did the government do what it was supposed to do in accordance with the law, contract, regulations, services provided, or similar? If yes, then revenue can be recognized if it applies to the current period. If it applies to the future, then we got a deferred inflow of resources. And you're probably saying to yourself, that's not much different than what we're doing today. Okay, so let's now go to the expense side of the ledger. So remember, our 4th true north is symmetry, and it should be considered to the greatest extent possible. So guess what, folks? GASB's initial view is pretty symmetrical. All you need to do is flip back a few slides. Step 1, does the government have a decrease in net assets? Step 2, does the decrease in net assets result in a related asset? Step 3, does this decrease in net assets result in an outflow of resources applicable to a future period? And if all else fails, we're going to recognize expense. And for those of you who need a visual, here it is. But to use a Seinfeld analogy, Since I happen to like Seinfeld a lot, we're doing opposite George here. If no decrease in net assets, stop. You don't have an expense transaction. If there is a decrease in net assets, but it results in an asset such as a prepaid expense or inventory or something like that, then that's your transaction. Debit asset, credit payable, or credit cash. Now, if that's not your transaction, is the decrease in net assets applicable to a future period? If yes, then your debit would be to deferred outflow of resources. If no, then your debit is to expense. Again, not too tough to take, I think. All right, so let's delve a little deeper into the framework and see how it applies to individual transactions. Again, a key to getting to category A is whether we have some form of performance obligation. Did our government have to do something for us to recognize revenue or expense? Meaning, did you actually provide the good or service to get to a revenue expense? The do something is based on this thing called a unit of account, which we've been using for a few years, especially with investments, meaning the aggregation of an asset or a liability or a good or a service in some form of, gee, there's a phrase here called binding arrangement. And again, I told you we're going to be hearing that phrase over and over again, and we're going to talk about it again in a bit. But remember, category B is mainly based on time. That time factor is what gives us this blessed event called deferred inflows of resources or deferred outflows of resources. So, okay, folks, what is a binding arrangement? I mentioned it actually even last month during our financial reporting model improvements webinar. Now, the auditors on the call who work with for-profit and not-for-profit clients have used the term binding arrangement over and over again. They understand the elements of FASB Topic 606, and they think it's pure joy. A binding arrangement is an understanding between two or more parties that creates rights or obligations or both among the parties to a transaction. A binding arrangement, it can be written or oral or even implied based on what your government's existing practices are. Now, examples of binding arrangements can include legislation, contracts, grant awards, collective bargaining. The binding arrangement may even produce one or more transactions for determining whether a transaction is a short-term transaction or a long-term transaction. And we talked about this last month when we were talking about FRM. When none of the parties have completed any of their required actions, a transaction hasn't occurred as of yet. A transaction occurs when one party completes a required action. And like any contract, oral, written, or implied, the parties must comply, not agree, but comply with the terms. That's called mutual assent. Again, the legal structure of government is a mutual assent by virtue of electing our representatives. Now, if you disagree with that compliance, there's this thing called the legal system as well as our democratic process. The next step is there must be some form of economic substance. The party has economic substance, at least one party, has economic substance and another party has benefits. Think about it. If you go out today and you buy a gallon of gas, which is going up in price, including in the price are various taxes. By buying the gallon, you agree to be taxed and pay for that gallon. You've had an economic consequence. The taxing government has an economic benefit, which results from the tax payment. Now, that's just one gallon. Let's say the gas station sells hundreds of gallons each day, if not more, and that station is one of many in your area. Those individual transactions may not be material, but in the aggregate, at the unit of account level for taxes, those taxes sure add up. Finally, there are substantive rights and obligations. You receive the gallon of gas you just purchased on the way home in exchange for your payments. But let's say you wanted some other stuff at this gas station. You wanted some lottery tickets. You wanted Powerball or Mega Millions. You wanted some snacks, and you probably wanted some windshield washer fluid that wasn't frozen. The gas station allows all those on one credit card swipe. There are multiple transactions in those purchases involving multiple types of taxes potentially, and even multiple governments due to the lottery tickets, because your lottery may be legally separate. But all of those have the same terms and conditions. You have a right to what you purchase, but you also have to pay for them. And those rights are different than the amount of cash you fork over. The rights and obligations do not net. That leads us to a 5-step process aligning to an additional decision tree in the PV. And this process is real important. First, if there's no binding arrangement, do we have to do something? No, it's not part of the GASB's project. So if you don't have a binding arrangement, you don't have a transaction that's in scope of this project. So for example, you do have a binding arrangement that's involved with an investment purchase, but the receipt of the interest revenue or the dividend revenue or something like that, that's a result of that binding arrangement and not a separate binding arrangement itself. And that's why investments currently are out of scope. Is there a mutual assent of the parties, either by law, contract, or something similar? Step 3, do we have identifiable rights and obligations that mean something? In step 4, are those rights and obligations interdependent? Meaning, to get something, do we have to give something? If the answer is no to steps 2 through 4, meaning the bottom of that of those chevrons there, if steps 2, 3, and 4 are no, it's a category B, much of which is taxation, grants, shared or appropriated revenues. And we'll show you this decision tree in a bit. So I mentioned this phrase, economic substance. Again, one party has economic consequences while another has benefits. Your government benefits from the taxation inflows, and your taxpayers have economic consequences. The inflows are presumably enforceable. But wait a second, we have this other branch of government out there called the judiciary. If a tax is found to be unlawful, then it can be overturned. Or in some jurisdictions, it can be overturned by a vote of the citizens. But it's presumed to be enforceable, and that's that rebuttable presumption of enforceability. The vote of the citizens is part of the mutual assent piece of each transaction. The rights and obligations involved with those transactions include things like transfer of cash in exchange for goods, services, or permits. So if somebody comes in and buys a building permit, that's a transfer of cash for a good or service. It may also involve the reduction of a liability. Interdependent rights and obligations in Category A transactions are linked, such as the rights are dependent on the obligations, and the obligations are dependent on the rights. If a government concludes that the rights and obligations in a binding arrangement are interdependent, then the obligations would present a performance obligation, and the rights would represent the right for payment or consideration for that performance. As a result of answering yes on the previous slide, the transaction in the binding arrangement would then be category A. Otherwise, the transaction would be category B. Now, I know it's getting late in the hour. For those who need a graphic on this, again, no binding arrangement, no transaction. Otherwise, say no to any step along this way and you're at category B. What we know today as a non-exchange transaction. So keep this one handy in your PDF, bookmark it. You're going to see it over and over and over again. And again, this is the future of how we're going to recognize revenue. Now let's categorize. Notice I mentioned many of these. And again, keep this one handy as well. You may want to bookmark it. Notice how it works for revenues and expenses and most of your outflows. For example, your salaries and benefits, that might land up being category A, but this does not always work. And it's the same for category B. It's not always non-exchange transactions, but the ones I've found so far mostly are category B. So is there a gray area among this? Well, yes, sir. And yes, ma'am. It's collectibility. GASB effectively removes from the scope of the project revenue and expense transactions that are invalid, illegal, fraudulent, or fictitious. The GASB also considered, but they ultimately rejected revenue transactions for which the collectibility threshold is low. So, for example, let's say it's below reasonably assured in current GAAP of collection of revenue, say from a debtor, a lien holder, or something that you just don't think you're going to collect it. It's below reasonably assured. So for right now, the GASB's not going to address that stuff. Maybe in a future pronouncement, but for now, the base revenue and expense recognition project doesn't look at anything below reasonably assured. Governments are motivated by their public purpose mission as opposed to profit motive. And in many cases, you provide public services regardless of whether or not you're going to collect on them. And think about all the things that you provide as sort of a fee for service, and then you walk back saying, we're never going to be collected on that. And think of, like, for example, your FEMA related transactions or your Medicaid related transactions. Those sort of things, you might not collect money for a long, long time. So that leads us up to the almost the top of the hour. I wanted to give you the heads up of what's happening until June on our webinar calendar. Next month, again, we're going to be talking the revenue framework in a lot more detail. Coming up in April, we're going to be talking about expense in the remainder of the PV. In May, we'll be bringing back your last and best chance. For those of you who have not implemented GASB 84, we're going to give it to you one more time, GASB 84. And we're also going to talk about GASB 97 for those of you who haven't implemented that. And then in June, we'll talk about other GAAP to consider for this year. So we're right at the top of the hour. If you do have a question for me, again, here's the calendar. You might want to keep it handy and certainly sign up and hear us. We got a lot more CPE for you coming up over the next few months. If you do want to reach out to me at Eide Bailey. By all means, more than happy to answer a question for you at any time. With that, Allie and Brian, thank you so much. Take us away.